my portfolio. Pimp my portfolio.
We are back with another Pimp My Portfolio where you get the opportunity to submit your portfolio for our expert to provide some ideas on how it can be improved. As always, we're joined by Luke Laretive from Seneca. How are you?
Bryce, Alec, how are you boys?
Good. Excited for this one.
Yeah, ripper.
Yes, so we are joined as well by Equity Mate community member Anubav. Anubav, welcome.
Hi, guys.
So Anubav has submitted his portfolio. We're keen to crack in. Before we do, Ren, give us a bit of a high level on the breakdown of Anubav's portfolio.
Yes, so this portfolio is all ETFs, interestingly. It's underpinned by a third of the portfolio is an S&P 500 ETF, and then about 13% of the portfolio is an ASX 200 ETF. So those two ETFs together are a little bit less than half of the overall portfolio. Then we have some thematic ETFs: semiconductors, cybersecurity, Asian technology, hydrogen, battery tech. And then to close it out with about 5% in each of these positions, Bloomberg Commodity ETF and an international small companies quality ETF.
Now, also, I should mention what hasn't made it into this doc is that there are some investments in Raise, Spaceship, and 18% of total portfolio is also in crypto.
Oh boy, that's a new
That's thrown Luke a bit
because I didn't get that. I
know.
So,
I'm sorry, not all that info made it through to you, but we like a few surprises here at Equity Mates. So, Anubhav, before we get Luke to give his views, how have you thought about constructing? So you've got a bunch of ETFs, some micro investing in crypto. How have you thought about constructing your portfolio to date?
The basic thought was similar, like have a core portfolio and a satellite option. And basically, a core for me would be the S&P 500 and the AXS 200. So I mostly wanted most of my money in that S&P 500 because I'm confident with that market. And then play around with several thematic ETFs. So like I've sold in and out of several other ETFs thematically as well. Like I've sold the gaming ETF, then bought semiconductors. So basically, that's where I chop and change depending, and just have some inflation kind of hedge with BCom, that commodity ETF is a thought, and just have crypto on the side just to get some returns, which has been pretty good as far as now, to be honest. So yeah, basically that was the thought.
Yeah, love it. I'm guessing you're. We'll leave it to Luke. Luke, over to you. What's the name of the portfolio that you've given Anubav?
I've had to quickly rename it.
Okay.
But just quickly, a slight addition to my previous name. It's Satoshi and the ETF Escapade. So it was the ETF Escapade, but I've quickly made a nice little adjustment there on the fly. Okay, so I'm going to go through what I like and then a few thoughts from me on how you can improve. So what I like is I really like your sort of core allocation, thinking about 50% of my money tied up in, S&P, ASX 200. Now, do I think the ASX 200 ETFs, as a general comment, are a good shout? I would say no. The reason why is I think the index doesn't represent the economy. So, those ETFs, index tracking ETFs, the idea is that the stock market's a representation of how the economy works. I think in Australia that's a unique misalignment, for lack of a better word. Now, we can have a conversation about that maybe another day and get into the nitty gritty, but just take my word for it. I really like the allocations to the quality smalls, and I really like the allocations to commodities. I think they're perfectly reasonable. I'd argue for active management, as I always do, but we can... No qualms, shall we say. No qualms on that particular front. I would like to see a little bit less, and listening to you talking now, Anubav, I would like to see a little bit less sexy story stuff and the sectorial sort of thematic ETFs. A little bit more invested in the foundational stuff, maybe not chasing some of these markets so much. And even if you did want to get into that, have exposure to those things, I would like to see that may be through like a small cap manager or a small mid cap manager or a active manager who's got a concentrated portfolio and can maybe protect capital a little bit better than just riding the lightning on those sectors longer term. You're trading quite actively by the sounds of it, which is great. I think just don't get caught up in thinking that you can get in and out of this stuff successfully long run. I think it's pretty well proven that sort of timing the market on a macro is really difficult to do sustainably, and perhaps think about, as you do make profits and you do take profits, again, diversifying into some more broad-based things. I think an MSCI All-World ex-Australia type exposure would be probably suitable, as would be some emerging markets exposure, whether that's through an active manager or even just an All-World was going to get you a lot of the way there. So if you got your heart set on buying ETFs, I would though. Finally, my final sort of comment would be, 60 basis points roughly to beta shares for an ETF. You can get an active manager for kind of, 80 or 100, whether that's Fidelity or GQG emerging markets, whether that's, some of the other concentrated global guys that we chat about. There's a lot of good managers out there who've got a sustainable track record for outperforming, who, if you're comfortable paying beta shares 60 odd basis points, I'd be more than comfortable throwing in an extra 20 or 30 and being with an active manager who's actually doing a job for me, rather than just reweighting based on, some esoteric index weights.
What ETF was that in relation to, or was that just
as a general comment around thematics?
Yeah,
I think if you're trying to play those thematics, there are great fund managers who do have, a lot of potential for outperformance in their markets, who are leveraging some of these themes, but in a more nuanced and kind of preferred way for me.
Anubhav, have you thought about active managers in your portfolio at all?
Not really up to this point, but definitely something I can go and have a look. Like Luke said, like all the thematic ETFs, there, like the management fee is pretty high compared to your like the general S&P tracking index.
Yeah.
So definitely I can put a thought to active managers manage ETF to something that I don't have an exposure to. That was my another question. Like, how many ETF is too many ETF? Since I'm not going the single stock way, is it like too much diversifying? Is that happening in my portfolio? Was another one that
for me
had.
For me, if it was my money, yeah. I mean, I would be thinking about a much more, so get that core sorted out so that you've got more exposure than just the US and Australia. Get the numbers right for you. That might be 50-50, that might be 80-20, it might be 90-10, whatever the numbers are for you. And once you've got that core sorted out, I would be looking to the satellite positions and looking to managers there. I think it would simplify what you're trying to do kind of on a self-directed basis and give you a little bit more process, a little bit more structure, and probably a little bit less work to do. And then perhaps maybe if there is a couple of stocks that you do like, or an ETF that you are particularly passionate about, down the bottom there, that 5% allocation or something like that's appropriate. But I would try and find a process that is simpler, but still gives you more more exposure across the world, but perhaps with less diversification.
Yep. No,
and
understandable.
And what about the final piece in the small? I mean, almost 10% of the portfolio is in micro investing apps. I guess similar commentary there then.
Look, I think the micro investing apps provide people with an opportunity to hack their mentality, for lack of a better word, and round up, purchases and stuff, which feels like an easy way to save money, get it invested ASAP. And I think there's a lot of benefits to it. I've got no real qualms with it. And the portfolios they offer, from what I've seen, are pretty fine. So assuming you're investing along that basis, then fantastic. Outside of that, I would just say to incrementally move money across to your main portfolio that's got a little bit more of a larger investable universe, if that's what you're trying to do, and just make use of that investable universe, rather than the limitations that generally come with some of these roundup apps. you guys kind of know my crypto thoughts. Like, it's not my wheelhouse, right? Like, I mean, look, if you're on it and you're doing well and you're happy, take some profits along the way and be sensible about it. Because to me, it just seems like a leverage play on risk on.
Love it. Well, Anubhav, I hope you've been able to get some actionable insights there. And thank you for submitting the portfolio. I think a lot of people would have taken something out of that for their own portfolio today as well. So thank you very much.
Thank you. I just want to thank you guys to getting me started investing. Like I started 3 years ago, I think, and I just started off listening to you guys chat. You guys making it seem easy. So I just want to thank you guys for doing that, and thanks Luke for having a review of my portfolio.
Mate, you're an absolute legend. These guys have done a fantastic job, and yeah, I'm stoked that you put it in for us. So thank you very much.
Yeah, thanks, Anubhav. Appreciate it.
Yeah.
Love that.
Appreciate
All
it.
right, cheers, guys.
Easy.
Good luck with it all.
Thank you. Bye-bye.
Yeah.
What a legend.
Bye.
Bye-bye.
One of the greats, Anubhav. One of my favourites so far. What a nice man.
Thank you to Anubhav for submitting the portfolio. And if you would like to submit yours for Luke to have a look at, head to equitymates.com/contact. Everything is there. Otherwise, you can book in a time with Luke at equitymates.com/advice.
Just make sure you're as nice as Anubhav. That's
Yeah.
And say nice things about us as well.
Yeah, while you're there. Exactly right. Give that ego a stroke.
But Luke, as always, thank you so much. We'll pick it up in the next segment.
My pleasure, gentlemen.